If equity investors believe a treasury company has the right management team in place and the right capabilities to raise and grow the value of the crypto held per share to go up, it should always trade at a premium to its net asset value. That's what MicroStrategy has proven. But if someone's just saying, I'm going to put Bitcoin on my balance sheet, I should get my stock price go up, that's never going to work. Ethereum would be very undervalued if you were looking at Circle relative to layer one. So that's why Ethereum probably could go to 10,000 or something. If the world suddenly realized we're going to tokenize more things, and like these tokenized assets like tokenized dollars trade at 100 times EBITDA, what should the blockchain be valued at? So then suddenly ETH should maybe be worth a lot more money.
Tom Lee starts by addressing one of the most misunderstood moments in recent market history, the sharp market sell-off triggered by tariff policies between February and April 2024. It caught everyone off guard. A waterfall decline, a true black swan, led many investors to liquidate in fear. But Fundstrat made a contrarian call. Lee told clients not to sell, advising them to stay the course because such waterfall declines often lead to V-shaped recoveries.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
The biggest, most recent lesson is what happened from February to April. Like this year, we had a black swan with tariffs.
Yeah.
I mean, it caught everybody off sides and off guard, and we had basically a liquidation, mass liquidation of the stock market, waterfall decline. And we gave very unpopular advice to our Fundstrat clients, which is don't do anything because it's going to be a V-shaped recovery. We said every waterfall decline is a symmetric bounce.
Yeah.
And we had so many people saying, yeah, it might have worked in 2022, it might have worked in 2020, but it's not going to work this time because the Fed's not behind your back. And we said it won't matter. And so a lot of people liquidated, but guess what? We had a V-shaped bounce without that. I think there's two things to keep in mind. One, there's plenty of precedent for treasury companies in the historical stock market world, whether it's master limited partnerships, but it's also like the energy industry, like a commodity industry. ExxonMobil was for 25 years, the largest or the top 5 largest company in the S&P 500 for a single generation. Like you could have been born, like graduated high school at 20, and by the time you're 50, the biggest stock in the market was still Exxon, okay? It was never valued off earnings. It was always valued as a multiple of its reserve of oil, and it never traded at the value of its oil. It always traded at a multiple higher. And so that means in the market dictionary, if equity investors believe a treasury company has the right management team in place and the right capabilities to raise and grow the value of the crypto held per share to go up, it should always trade at a premium to its net asset value. That's what MicroStrategy has proven. But if someone's just saying, I'm going to put Bitcoin on my balance sheet, I should get my stock price go up, that's never going to work because that doesn't create that ability and the attractiveness, which I described earlier about why treasury companies are attractive. Like can they lower their cost of financing to grow their coin holdings per share? And if they can't, it should trade at NAV. So I think the bifurcation you're highlighting is the market's conclusion that not everyone's going to be able to achieve that. Circle, which has been a very successful IPO, and it's been the most successful IPO like in the last few years, and it's crypto. I mean, crypto has been one of the best equities and now the best IPOs. But Circle trades at around 100 times EBITDA. So, a 1%, yield, you might say, or a 1%, EBITDA yield. I mean, it's a pretty sizable multiple. But stable coins really operate off a layer one. So, a lot of Circle operates off Ethereum. And if you look at the tech stack, typically, the more you get into that layer one, sort of level, the higher the multiple should be for the business because it actually benefits from the multiple applications sitting on top of it.
Yeah. No, that's a good point.
So then
Sorry,
Yeah,
I'll let you
so on
finish
that
your
same
point.
metric, Ethereum should have a staking yield. The yield should, if the enterprise, Ethereum should have a much higher multiple. And so
Well,
I asked that to Sean Farrell. He said, if you do the rough math, you get Ethereum would be very undervalued if you were looking at Circle relative to layer one. So that's why Ethereum probably could go to 10,000 or something. If the world suddenly realized we're going to tokenize more things, and like these tokenized assets like tokenized dollars trade at 100 times EBITDA, what should the blockchain be valued at? So then suddenly ETH should maybe be worth a lot more money. ETH treasury models, and there aren't that many. There's a couple out there, including the one that was announced yesterday. There's a bit of an advantage of a Ethereum treasury company if you directly compared it to a Bitcoin treasury.
Mm-hmm.
One is that there is a yield you can earn on Ethereum by staking. So you actually can grow your Ethereum per share from that income activity. The second is that Ethereum's delivered volatility, so it's a measure of how much it moves, is actually twice that of Bitcoin. So in theory, if someone had looked at it as like a capital markets access, like following MicroStrategy's model of trying to earn more crypto per share, well, Ethereum's volatility actually makes it cheaper to fund purchases. So because the higher the volatility you have, the more you can sell volatility and then lower your cost of borrowing. And the third is, of course, that because it's a staking token, a treasury company actually can also act as an operating business on the network itself. And that's important because that ties back to something I'm originally thinking about, which is that as more things in the financial world and real world become tokenized, then financial institutions like Goldman and JP Morgan and Amazon Walmart, as they do stablecoins, are also going to want to stake Ethereum itself. So we're essentially doing the underlying architecture of what other businesses will actually do. So we're essentially getting in front of what other businesses will do.
Lee highlights that while other blockchains like Tron have significant stablecoin activity, much of that occurs outside the U.S. regulatory perimeter. Ethereum, by contrast, has many validators and operations tied to the U.S., a key feature for institutional adoption. He notes that firms like Robinhood are already laying plans to tokenize private companies. That will eventually require secure, programmable, and regulatory-friendly blockchains, and Ethereum leads that pack.
I like the Bitcoin treasury model. MicroStrategy is really the blue chip of that, and MicroStrategy is a granny shot ETF, in the granny shot ETF. And because it's big enough now to be included on the major indices like the NASDAQ 100. But what makes MicroStrategy attractive is that he's accumulated enough Bitcoin. He's accumulated almost 600,000. That is so much Bitcoin that he has what I call a sovereign put, meaning if the US government ever wants to create a Bitcoin reserve, well, they can either try to buy 1 million Bitcoin in the open market, or they'll buy MicroStrategy at a huge premium. So there's no way MicroStrategy should ever trade at net asset value. And then because of the volatility of Bitcoin, MicroStrategy in turn can use the capital markets to raise money at much reduced cost. Like if he held Bitcoin, it'd be very expensive for him to borrow money to buy more Bitcoin. So if you own MicroStrategy, he's working to give you more Bitcoin per share every day, and actually at an efficient cost. So over time, you're owning more Bitcoin, so you benefit from the Bitcoin going up, plus he's getting you more Bitcoin per share. I do think there is, Ethereum has a vibrant and active community that's working every day to kind of create and improve it. And there are, it's a smart contract platform. And so to me, Ethereum might have actually languished and lacked innovation for some period of time. And that's really what, that was behind the fact that Ethereum sort of hadn't moved much. But I think that the fact that there's now tokenization taking place of real financial assets, and you saw with Robinhood the idea that they're going to be tokenizing a lot of things, including private companies. I think that there is going to be a real look back at the layer one networks that offer a lot of utility with smart contract, but they're secure because they're actually US based, or a lot of the validation takes place in the US. And so that's why I think Ethereum really stands to benefit. I know that there are other chains that have a lot of stablecoins, such as Tron, but one of the challenges, of course, is that that a lot of the activity on that takes outside the purview of the U.S. There was a date where, there was a registration statement effective, and then someone had written, I think the crypto world is not really used to SEC filing, so then they see this registration statement, and then someone like Roadstar, oh, everyone's dumping their shares. And I think in crypto, that's common because they would call that a rug pull. They're like, oh, there's a rug pull about to happen. And but I think that's you're right. Over time, people learn different behaviors. I mean, I would say the most successful crypto traders actually are quite gifted, and they actually do quite well trading equities. But the thing is, in the equity world, there's been a lot more value created by not trading. I don't know if you saw the tweet by Chamath Palihapitiya, but he said, I think yesterday, that, let me try to find it, but he was basically making a reference that if he had never sold any of his VC bets, he'd actually have $30 billion more money.
Lee ends with an insightful cultural observation. Many crypto traders are used to quick exits, panic reactions, and rug pulls. That mindset doesn't translate well to the equity world. In equities, long-term holding often outperforms active trading. He points to a quote from Chamath Palihapitiya, who recently said he would have made $30 billion more had he just held on to his early investments without selling. The takeaway? Whether in stocks or crypto, long-term conviction and strategic thinking often outperform reactive behavior. Please like and subscribe.